You're watching the latest financial news with VEVOFX. It's Friday the 9th of February 2024. So every month, the US eagerly awaits the unveiling of two crucial inflation barometers, the Consumer Price Index, the CPI, and the Personal Consumption Expenditure, the PCE report. And while the PCE report holds the spotlight as the Federal Reserve's favoured measure due to its stability, traders hold their breath for the CPI figures, slated for release next week. None of these metrics even come close to the Fed's 2% inflation target. If consumers don't anticipate hitting that 2% mark within the next 12 months, chances are CPI won't either. Now brace yourself for some potential market fireworks. If CPI expectations unexpectedly shoot up before the report, brace for a strengthening US dollar and a slump in its counterparts, as traders rethink their H1 rate cut predictions. And conversely, if CPI expectations take a nosedive, expect the US dollar to retreat before the report hits, and possibly tumble further if the actual inflation figures fall softer than anticipated. Now, for our dedicated followers, it's no secret that we've been singing the praises of the US dollar this year, foreseeing even loftier heights on the daily chart. However, when we shift our gaze to the weekly chart of the US dollar index, a few noteworthy signals emerge. So, the US dollar faces potential resistance at its 2022 peak, with large speculators teetering on the edge of flipping to net short exposure, while its year-to-date rally nears trend resistance, approaching its sixth consecutive week of gains without correction, raises sustainability concerns, hinting at limitations on the upside, despite optimism from asset managers, which may signal a turning point if inflation expectations and CPI figures dip next week. So the dollar index, ever resilient, boasted gains, currently trading at $104.21, bolstered by the robust employment data unveiled last Friday at the non-farm payroll news. Therefore, the dollar index is looking likely to regain its last year's high of $107. So, over in Europe, against the dollar, the euro has seen a modest 3-day rebound amidst a previous downtrend, hinting at a possible reversal point. The dollar's dominance casts a shadow over most major currencies, causing the euro itself to decline to $1.0763, representing its most significant one-day percentage drop in 2 weeks. And the euro has continued this downturn this week. As for sterling, well, sterling's recent candlestick formation against the dollar, resembling a hanging man below the 50-day EMA, suggests a loss of upward momentum, although it faces a problem between the 50 and 200-day EMAs. The pound fell to $1.2606, that's down from its nearly 5-month high of $1.2825, achieved in late December. Traders are focusing on the coming week's jobs and CPI inflation data, of course, to refine their interest rate models, especially for that reversal. Now let's go down under, and the Australian dollar's decline against the US dollar from the 10-day EMA signals a potential retest of the week's low, maintaining the potential for a bear flag breakout toward old lows. And across the water to New Zealand, and the New Zealand dollar, though initially hinted at further downside below the 200-day EMA, but the Central Bank of New Zealand's forecast of additional rate hikes, has temporarily shifted focus. And the Australian dollar fell by 0.43% against the US dollar to 0.6502, and the New Zealand dollar declined by 0.39% against the dollar to 0.6138. So across the Atlantic again, and looking at the Canadian dollar, well, the Canadian dollar against the US dollar inverted hammer suggests a slowdown in the pullback, potentially paving the way for a rally above a triple top, forming an inverted head and shoulders pattern. And it continues the uptrend by trading at $1.3455, which is a huge drop from its Monday high of $1.3541. And this shows that why the Dixie is rallying higher, the USD CAD is not strongly following suit, emphasizing a potential weakness or even retracement in the dollar. Now finally, let's go over to Japan, and the yen's upward bias towards 150 remains intact as it keeps zooming higher, bolstered by the Bank of Japan's dovish stance, and of course the Fed's reluctance towards rate cuts, with a strong CPI print adding excitement to its prospects. And similarly, the Swiss franc against the dollar, despite a small shooting star candle, maintains strength above January highs, supported by the Swiss National Bank's aversion to a stronger Swiss franc. And despite this, Wall Street achieved record highs, with the S&P 500 surpassing 5,000 for the first time in history, and others like the US 30 and Nasdaq both on bull runs. And finally, crude oil prices surged over 3.4% on Wednesday this week following Israel's rejection of a ceasefire proposal in Gaza, sparking fears of heightened tensions in the Middle East. So there you go, that is it. Do let us know your thoughts in the comments below, and of course if you'd like to keep up with the latest Forex news, don't forget to click on that subscribe button, and why not give us a like whilst you're at it. But in the meantime, thanks for watching, and we will see you next time. This has been the Quick News brought to you by VEVOFX.